brought to you by Interactive Brokers. Deep discount direct access. 90+ markets worldwide.
Before we get back to those calls and emails, remember, if you never want to miss the top picks on Market Call, we'll send them straight to your inbox. Each night, we'll send out those top picks and analysis from our experts on the shows. You go to bnn.ca/subscribe to sign up. You'll also get Marty Say's mordacious commentary on the market-moving stories every morning. Here's an email from James in Toronto. The subject is Visa. He writes, since we're getting into the seasonal shopping period, would Visa be a good bet?
Right. So, first of all, as far as a theme goes, in financial services, probably the only theme we really like are the card issuers. So whether you're talking about Visa, whether you're talking about MasterCard, whether you're talking about Discover, the whole group, even Amex, looks pretty good. Why? Well, first of all, there's two ways that you pay using a Visa card. There's a fee that Visa gets paid, and then there's the spread that you pay on the interest that you pay on your balance.
Do you ever?
So the banks love that business. It's the most profitable business that they have. In the case of Visa, Visa's customers tend to be the high-end customer who use their card a lot. So Visa has a very strong franchise in the most valuable part of the market, which is great. The banks like to promote that business because it provides them good margins, and it's a global growth story. They're growing in North America, yes, but there's great growth globally. MasterCard we prefer. So I'd invest in Visa. We don't own it. We own MasterCard. And we own MasterCard. It's a more mid-market constituency, but it's faster growth, and they've got more global growth. They've done a better job overseas. But I think in general, you want to own the things that the issuers really want to support, and the interest spreads are so good for the banks that you can expect that they're going to continue to try and grow this business, and we think that it's very, very attractive.
So you'd pick MasterCard right now over Visa?
I'd pick MasterCard over Visa, but I'd be happy to own them both.
Sure. We've got John on the line from Ajax, Ontario. Go ahead, John.
Hello, Andy and David.
Hi.
We always appreciate your opinion about and insight about the stocks. My question is about CAE. I do already have Bombardier in the same account. Now I'm thinking whether should I buy or establish a position in CAE or Finning. Thank you very much for your opinion. And Andy, you need to enlarge this show to 1 hour. Thank you.
Oh, my goodness, I'll pass that on. Yeah, well, it's an hour in the evening. But you want an hour in the middle of the day, too?
Of course.
Okay, thanks. I'll pass that on to our glorious leaders. Thanks.
Again, focusing on specific themes that are in this marketplace, one of the key themes is the aerospace industry and companies that are benefiting around the replacement cycle in jets. And you could put CAE in that camp. The problem is they're not really winning. We would prefer, if we're going to be in the aerospace area, to be in one of the parts providers, companies that are selling both into Boeing and into Airbus. And so we've talked before about companies like Precision Castparts, Triumph Group, and there's quite a number of companies in that space. CAE has been a weaker performing stock in the group, and again, we're looking for a strong sector and leading stock in the group. And so I would prefer to look outside of Canada and look at one of the larger global parts providers.
Okay, that's the way you play aviation.
Yes.
You're confident, though, aviation's in a bull market longer term?
Yeah, the international market is just so strong, and it's not so much about worrying about AMR, it's worrying about the quickly growing international companies. There's a big replacement cycle because, of course, the new planes are so much more energy efficient that the airlines need to replace these planes. And we want to be agnostic to Airbus or Boeing. We want to own the companies that are benefiting from growth in both.
Tony's on the line from Calgary. Go ahead, Tony.
Hi, thanks for taking my call. I'd like to ask David about the oil and gas service sector. It's that time of year where they're kicking into high gear there. What did he think about the whole sector? Did he like Calfrac? Thanks.
Sure. Well, first of all, on a sector basis, we really like the services companies, but specifically the ones that are benefiting from some of the newer technologies that are being used. Calfrac fits right into that camp. And so, yes, we quite like Calfrac. There are others in the U.S. that we like also, but I think this is a theme you're going to continue to see. These companies are going to make a lot of money. There's tremendous demand right now for services. You've got interesting growth oil camps all over North America. and I think that Calfrac could be a big beneficiary.
The stock's been a bit weak there lately.
Yeah, certainly the sector pulled back with the market. Some held in a little better, some held in a little worse, but the fundamental characteristics are so compelling. You did hang in well above the lows from early October when we put in the first low in this market. Yeah, it certainly pulled back, but it didn't break down technically.
Lou is on the line from Mississauga, Ontario. Lou, you're on the air.
Thanks for taking my call. David, I'd like to ask you a question regarding Manulife. I have quite a bit of it and wondering if I should sell. I have around 7,500 shares of the damn thing.
Right.
What do you think I should do?
Lou, this is a tough one for a lot of Canadian investors because it's a widely held stock and it's been a really tough performer. The problem is, first of all, you're in a very difficult neighborhood. The insurance companies are having a hard time. And when it comes down to it, there's three things you want to look at in these companies. First of all, do they have growth in the products they're selling? And Manulife has had some challenges in growing because some of the high growth products they had in 2008, 2007 are products they're no longer selling, turned out to have too much market risk. When you look at the way an insurance company makes their money, largely, it comes down to can they generate a return on the premiums that they get paid in excess of what they're going to owe to pay out. And one of the big contributors to that is how they do in their bond portfolio. With long-term bonds at 2%, it's hard to see how they get a lot of excess return there. So low interest rates really hurt insurance companies. The second place, of course, is how they do on their equity portfolios. And equity markets, as we all know, have been very, very volatile. So in this kind of environment, there's not a lot of people who want to make big bets on the insurance companies unless you think rates are going higher or equities are going to march their way higher. And neither of those two things are wildly apparent at this point. So we would stay clear of the industry in general. We're actually short a couple of insurance companies, not Manulife. But I think it's the financials in general, again, are a tough camp to be in.
Can you tell us who you're short?
I'm going to have to if I get a question later on it.
Okay. Somebody email David. Let's find out who he's short. Give us one name. Who have you gone short on?
We've been short Sun Life.
Okay.
But frankly, the whole industry is having a difficult time, and we don't think interest rates are going up anytime soon, and we do think that the next year there could be some challenges on the equity side. So we're very cautious in this space.
Coming up, we're going to get to David's top picks. And remember, he's got an energy mid-market player for you. He sees more upside for this one.